Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest, and that's going to be Andy Swan, the co-founder of LikeFolio.com, joining us. Welcome to the show, Andy.
Hey, thanks.
Hey, so Andy, I want to take my mask off. I'm tired of it. Mandates starting to come off, thankfully, and hopefully, maybe not here in Illinois. You know how the state goes. But when you look at Uber and the reaction that we're seeing in Lyft, I didn't think Lyft's report was that great. Stock was down initially. It's rallied. What kind of data are you guys seeing for Uber? Because besides the ride-sharing business, they've got a bunch of losing businesses under their umbrella. What kind of data are you seeing here ahead of earnings?
Yeah, you kind of nailed it there. I mean, Lyft is the pure play on ride-sharing, and ride-sharing starting to come back, in a fairly meaningful way. When we look at, consumer mentions of taking really either an Uber or Lyft or some sort of ride-share, we see it coming back in pretty much every one of the major categories that we look at in terms of why the person might be hailing a ride-share. And, for a night out on the town, to get to work, those are coming back, as you would expect, almost, getting close to pre-pandemic levels. But the one really major lagging indicator for ride sharing is trips to the airport, trips to and from the airport or while traveling. And so we see, both Uber and Lyft, but Lyft especially, extremely reliant on travel to, airports, destination type of travel, where people need those cars. They don't want to rent a car. And that sort of thing. And then on the other hand, Uber has this hugely diversified business where what they can do is deliver food, deliver alcohol. They're not just in the people transportation business like Lyft is. And so with that, we saw Uber really able to diversify its revenue streams through the pandemic. But as we get out of that and people stop ordering food to their house nearly as much as they were, we can see Uber Eats starting to become a little bit of a drag on the company compared to rival Lyft. And so the big takeaway for us on the meal delivery side of things for Uber is really that they're losing that battle against DoorDash. DoorDash, we're seeing strong demand continue, even growing demand post-pandemic, whereas all of the other competitors falling off. And so what helped Uber, during the pandemic, that diversified revenue stream may actually be a little bit of an anchor on their growth moving forward. And so I don't think there is much of a pure bullish play as Lyft was. We had Lyft bullish going into earnings, and with Uber, just a little less sure about things because of those secondary businesses that they aren't dominating the way that investors had hoped they would.
Andy, we do this little ritual every couple months with Andy Swan, and that is, poof, you are the CEO of Uber, right? What does Andy Swan do to make this company profitable? Because frankly, the more you go through the different parts of the company, and now you're talking about even the one part of this company that saved them, which was food delivery, now that's trailing off as the pandemic ends. What would Andy Swan do to make this company profitable? Because frankly, it's either one thing or the other, right? Either fares have to go up, which they just spiked and then are starting to come down, or wages that they pay their drivers have to come down. How do they get to profitability, Andy?
Yeah, I think it's a really, really long road. I do think that their overall strategy of winning the market and waiting for, kind of waiting competitors out, because one thing that Uber has to deal with that most companies don't have to deal with is venture-backed companies that are willing to lose lots and lots of money to compete with them. So all of their competitors are willing to lose money. So Uber pretty much has to be willing to lose money. And so they have to wait that out. They have to be able to be the last man standing, and they have to create a logistics platform that is better than everybody else's. And I think they are doing that. I think the logistics platform that they're creating is being built to deliver people, goods, food, you name it. And as you know, the logistics situation has become more complex, and a player like Uber that handles that last mile gets more and more valuable as time goes on. So I think they're on the right track. I just don't think that profitability is anywhere in the near future if they're going to stick to their game plan of becoming that local logistics dominant force in the future. And eventually, I think they have their game plan has to be that these cars become at least semi-autonomous, where a lot of the routes can be done without a driver that has to be paid, and that's kind of the gold at the end of the rainbow. But it's going to take a really long time to get there.
Yeah, and that's what I was going to hit on when Kevin asked you, when are they going to be profitable? That's when they don't have to rely on the drivers at this point. And now you've got gas prices, at or near record highs also. But Lyft did say that the number of drivers was starting to increase, even though we're seeing higher fuel costs, Andy. But that one chart that you had up with rideshares and the airport component of that, how big is that for Uber? Even though they've got all these other losing businesses, it seems like that would negatively affect Lyft more because Uber has other streams of revenue. But at the same time, for both of them, this is a big component of the ride-sharing part of it, right?
Yeah, it's a very big component. It's one of the primary drivers, not just of revenue, but also of new user adoption. When people take a trip and don't want to rent a car, a lot of times that's the first time they may introduce the Lyft or Uber app to their phone, create an account, or at least reinvigorate an old account that they haven't used since 2019 or 2018. So it's a spark point that can happen. And the more people are traveling, the more people are taking vacations or business trips, the more likely they are to engage or re-engage with these companies. And on the driver side of things, I think it was interesting that Lyft said, they're getting drivers back in the game. That's another advantage Uber had over Lyft, is that because they had these alternate, these alternate offerings, whether it's food delivery or otherwise, they kept drivers in the game throughout. And I think that's a big advantage as things ramp back up, especially if they ramp back up quickly in certain areas. Uber may have the drivers that Lyft doesn't have ready to go yet.
Yeah, and Andy, when you guys look at this, when Uber going into earnings, we saw the reversal in Lyft, even though there may be some sketchy numbers in there, and the analyst community lower in price targets across the board. But now we've got Uber up 4% going in this report. What kind of earnings score are you guys giving at Uber at LikeFolio?
Yeah, moderately bullish. We were pretty bullish on Lyft, moderately bullish on Uber, again, because of that extra weight they're carrying that got them through the pandemic, but now it's turning into a little bit of extra weight. We'll see how they deal with it. I think guidance is going to be a huge key for this company, and long term, really like Uber as the overall winner in local logistics. But there's a long way to go between here and there.
Yeah, I think a lot of analysts agree. A lot of those price targets that they're giving it are, at the end of 2022 into 2023 as they figure out how to become profitable. All right, great stuff as always, Andy. Have a great day.
Thanks, you too.
All right, that's Andy Swan, the co-founder of LikeFolio.com, joining us and giving us the sentiment and data on Uber.